This is a webinar where we're going to cover as many markets as possible in 45 minutes and basically see what's setting up and what opportunities we may like to take for the week ahead. Before we get into the charts, we first need to go through the disclaimer, which says the content of this webinar is not investment advice and should be used purely for educational purposes only. All participants are advised to seek their own counsel prior to investing or entering into any trade. And spread betting and any other type of financial trading carries a high level of risk to your capital of the possibility of losing considerably more than your initial investment. The content of this video may not be suitable for all investors, and individuals should ensure that they're fully aware of the risks involved, and if necessary, you should seek the advice of an independent financial advisor. Okay, now we have that out of the way, let's move on and take a look at the chart. So we'll go through an alphabetical order. As with the previous weeks, we probably won't be able to get through all of the pairs. So if there are any that you would like to see in particular, please feel free to post in the chat box so that I know to make sure that I cover those pairs. Last week I was on a very, very high resolution monitor, and we found that things were a little too small. This week I'm on my MacBook Pro, so hopefully the screen is a little bit better, although I just had a quick test with my colleague from FX Street and it still seems to be a little bit small. Problem is, if I make it any bigger, then we get to a point where we can't really see the price action, which is the most important thing. So what I'll try and do is I'll try and call out the levels that we're looking to trade from, if that helps you. Okay, if you've got any questions, please feel free to post them in the chat box. This is meant to be an interactive session, so it's not just me talking at you. I want this to really become more like a bit of a conversation. Okay, so starting with the Aussie Cad, all right, what I like to do with all of the pairs that I look at, okay, is I do like to zoom out quite a bit, almost to the point where you can't see the individual candles. That's because when I'm picking out the key levels, the individual candles aren't as important as the levels themselves. So lots of traders are they'll get to the chart and they'll have their screens like this. Now, to me, I can't see anything here. I couldn't tell you where the major levels are that we need to look out for. And part of trading successfully is knowing where to take your trades from. It's not good enough just to understand what a trading setup looks like. You have to take the trading setup from levels that make sense. And starting like this, you're not going to be able to find it. So what I do in the beginning is I always zoom out on my charts here to try and figure out where are the major levels around me that I should be paying attention to if I want to be trading. Okay, now you can put in, all of the levels that you see. We started to do that last week, but we found that actually that took up a lot of time. So what I'm going to do this week is I'm just going to put in the major levels that are in and around the price action, so where we potentially could be trading from. Okay, so that would be this one over here. So we've got this level over here. I'm going to put in, so I've got that resistance level. We've got the one above there, but that was a reaction to this one here. We've got this high over here, which is where the market previously was. And then if it breaks down here around this area, because of this high over here, I'll zoom in a little bit for you. So because of this high over here, and then we can see it came back and it reacted with it again and again over here. So that's going to be a place that's going to be interesting to us. So on the Aussie Cad, we need to try and figure out which direction we want to be trading in, right? And if we look at the market overall, we would have to say that it was trending upwards, even though we had some opportunities to sell around last week. And we, in fact, coming into this week, we were thinking about selling beneath this level here. It looks like the market wants to go out up above it. Okay, so looking at the overall momentum of the market, so last year in May, we had a low, we've got a higher low over here in January. We've got to a high here, which is higher than this previous high. Now we've got this current move that we're in right here. So if I zoom in a little bit for you. So we've got this current move here. The market is moving up and up and up. This one we're expecting to break out above the highs. And at the moment, we're just sitting above this level here. So we're looking for some price action at this area to be able to take us long. Now, if we wait for it on the daily chart, you're probably going to miss it. So we need to go down to a shorter term time frame. And we can see that on the hour chart, we'll be able to see some sort of a setup here. What I would like, okay, yes, we could buy through the highs here at 1.02159. That's very, very possible. But if we do that immediately from here, I kind of feel like the market will have moved quite some distance in a relatively short period of time. And what, you know, if you look at the markets, it rarely just kind of goes from point A to point B without pulling back. And that's something we need to think about when we're trading, sort of like what is a measured market move. So if the market were to break out above here, you would reason that potentially it could go up to around this area over here. Okay, but then you need to think about, well, where you're going to place your stops, because you'd say, well, that's not a bad move. 1.0216 up to 1.0253. So you got sort of like, what, a 30, 40 pip move on your hands there. So you'd say, okay, that's not too bad. You can make some money from that. However, then you need to think about your stop loss. Now, if you were to take it as soon as the market comes through here and you wanted to place it behind the most recent swing point, you'd have to place it all the way down here at 1.0124. So you would have quite a, you know, almost like 90 pip type of stop loss for what is going to amount to be not the biggest profit targets. You've sort of, instead of having like a 1-to-2 risk reward, you've got a 2-to-1, which isn't the worst thing in the world. You know, I have lots of friends that do trade with a very negative risk reward, but one thing that my brother and I try to teach retail traders, because retail traders are going to be wrong in their execution of their trades, in their analysis of the market. So we want to retail traders to trade systems and setups that allow them that sort of degree of poor trading, really. So, and that's why we kind of recommend that you have a positive risk reward, at least when you're starting out. So back to this trade over here. If we take the trade straight through the highs, we would be forced to have a stop loss that isn't, they'll put us in a negative risk reward situation. So what we would like to see instead is for the market to kind of hover around this area here, perhaps go sideways a little bit, creating a congestion zone. Once it's done that, we will then take the break of the congestion zone, and we will more than likely be able to have our stop below the congestion zone, which will be somewhere around this area here, therefore giving us a positive risk reward as opposed to a negative one. So as far as the Aussie CAD goes, as long as we hold above this level, we're bullish. We will be looking to take a buy opportunity. If it breaks step back down below this level and holds below this level, then we'll have to change our views somewhat, and perhaps look for a break beneath this level here at 1.0125. But as long as it's holding above here, we have to remain bullish. The Aussie Frank is a little bit different. So I've put in this resistance level here, which is where the market previous came to and sold off from it. Now it's broken through that level. And if we actually zoom out a little bit, you can see that it broke through an even bigger level over here and rejected that level. Okay. So it broke through that level there, it rejected it. It's also rejected this high here. So at the moment it's trading beneath this level. What we would like to see is for this area here to hold on the Aussie Frank. So what we'll be looking for is like a, maybe like a bearish one. Let me turn off trade the news because you're going to keep hearing, which we don't want to hear. So let's get rid of that for a moment. Where was I? Okay. So we want a reaction to this level here, maybe something like a bearish engulfing candle over here, which will convince us that we want to take this short. Again, this is one of those trades where as long as the market holds beneath this level, then we'll be bearish. If it breaks out above, then we'll be forced to change our bias to be bullish. But at the moment, it's rejected quite a fair few levels. On the daily chart, you can see that we've got quite a bullish candle here. But hopefully that will halt somewhere around here and we'll get the opportunity to sell it, because that really is where the best technical setup is, in our opinion. Moving on to the Aussie Yen. Again, let's zoom out and look at the levels that we're playing with. So the Aussie Yen was in a downtrend since 2014. You can see this here with, let me get my paintbrush. You've got a high there, you've got a lower high there, you've got a lower high, and then the lows are being broken all the way down there, like so. Okay, then the market kind of consolidated a little bit, and we bring ourselves to this price action here. So we've got this consolidation, bottom in price action. The market breaks out above this level there. When it broke out above that level, that was our signal to get in and to ultimately go long. Then the market is now playing with this high over here, which is fine. We don't have an issue with that. We think that the longer term trend is to the upside, so we're just waiting for the market to break out above that high. Looking at that on a 4-hour chart, it's a little bit messy. So we might need to go to, oops, get rid of that a minute. A higher time frame to be able to really see the sort of price action that we're going to want to be trading. So what we may look to do here, so if I put in, you could look to take a trend line break. So when the market breaks out above that level, let's make that thicker for you. Change the color a little bit. Green? No, not green. So we can wait for the market to break out above this level here, above this high here. You see how when you sometimes you zoom out, you go to a higher time frame, it just gives you that little bit of perspective on the market. When we were looking at this from a 1-hour perspective, it's quite difficult to see what the direction was of the trend. But if we look at it here, we can see that the market is holding these lows here. And what I always say is, in an uptrend, the lows are more important to me than the highs, and in a downtrend, the highs are more important to me than the lows. And what I mean by that is that if we're in an uptrend, we want, we're not going to get the market break out to a new high every single swing of the market. There are going to be some periods of consolidation. But from my perspective, as long as the lows, like these here, can kind of hold in place, and we've got a nice platform to be able to take a trade to the upside. Now, obviously, if this low cracks, then we'll be looking to take a sell from there. But if it holds, and we can get this sort of price action here, the market breaks out above this level at 87.08, we will be taking that. We will be long. So we'll be buying the markets. Okay, so that's that in the Aussie Yen. Let's look at the Aussie New Zealand. So this one here, the Aussie New Zealand, has gone a very, very long run, a relatively short space of time. This daily candle over here is very, very bullish. If we actually get the daily candle close like that, then we were actually looking for this to pull back a little bit, because we thought, it's gone a long way in a short space of time. Let's see a little bit of a pullback to this sort of area here. But if we get this candle close above that, we may be forced to go to a shorter term time frame and look for an opportunity there. Not chase the market, because if we don't see a valid technical setup, we don't take the trade. But just from a pure price action perspective, if the candle, this candle over here, closes above these here, that would be very, 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 very bullish. And you would imagine that the market is going to, let's say, at least come up to this sort of level here before it moves down to that level there. Okay, sort of on the balance of probabilities there. But at the moment, nothing to be traded there. The Aussie dollar. Aussie dollar is causing us a few issues at the moment, because there is no real area to trade here there. We would say that we're not really willing to take a trade until we break and close above that level there. That's on the long side. On the short side, I mean, we'd take, if we broke out above this level and closed back below, we would take a short trade. But in terms of a breakout itself, you would have to say that until the Aussie breaks out of this area here or this area here, we're going to be in a consolidation phase. So that will be a case of, selling tops and buying bottoms. So nothing to see there at the moment. The CAD Frank, longer term perspective, We've got this resistance level here. If we zoom out, any big time ones? Nope. But that kind of does coincide with that previous level of support over there. So that's the biggest level we've got. Until the market approaches that level there, there's not really any sensible setup to take anyway. We've got this low there, that one there, but so from the CAD Frank perspective, nothing is on at the moment. The CAD Yen, this one's kind of been moving lower and lower and lower. We expect this to move to the upside, to be completely honest with you. We've got the market respecting this trend line here. So every time it comes up to this trend line, it sells away from it. So that could be a tactic. The next time it comes up here, we could sell the market. But ultimately, look at this price action here. We do expect that to go higher. We might need to keep an eye on oil prices as well, because that's, with the Canadian dollar being a commodity currency, that's obviously going to have an impact on it. So if you see oil prices rising, then you may see the Canadian dollar strengthen as well. So looking at this particular pair here, at the moment, I mean, we are bullish. It is certainly a minor sort of, it's a little bit more of a pullback now, sort of like a minor downtrend. But if we look at this price action here, we think that ultimately it's got a lot of room to move to the upside. And this kind of, when we're looking at a trend and we're looking for the direction to take a trade, and we look at the previous momentums where the big move was, to kind of gauge the direction of the next move. And if we look at this here, we would have to say that the big move was to the upside there. So now, okay, it's capped by this area here. This is where it came up to, the high. We would say that it would be completely logical to say that we would expect the market to break out above this level and move up towards here. If you just look, if you forget about everything else, you just look at the patterns of the chart, that would be a logical type of trade after this price action here. But you need to wait for the technical setup. You can't just sort of trade it willy-nilly. So you wait for the market to get up to that level, and then you take the trade from the level. The Frank Yen, so the Swiss Yen, pretty much the same thing as the Canadian dollar, only we don't have the pretty sort of trend line in there. But we would say that if you look at this price action here, all the way down 2015, all the way down there, we've now come to a pivotal level in the markets. We wait for the market to break out above this level. You have to get long. You have to. You have no choice. If you don't, you potentially miss a very, very, very big move. And what we'll do is you'll look back on this in years and years to come, right? So you'll look back on this in 2 years when you see the market is all the way back up here, and you will identify this area here as the pivotal turning point, because you say, well, you had the initial move up there, had a little bit of a pullback, and then you break out above this level and you want to take it long. And it might be one that you have to hold for a little while. But if you don't take it, you will kick yourself, because it will be one of those trends like this one here, where with the benefit of hindsight, you could have said, okay, so looking at this here, we've got the market comes down, pulls back a little bit, all right, and then it breaks through this level over here. Let me just draw that in there for you. It breaks beneath this level here. When it broke beneath there, you would say, okay, you have to be short here. Okay, and you could have held it for however long, and you can see that the market moves all the way down here, which is great to see. So with the benefit of hindsight, you could say that that was a turning point. That's where you wanted to get short, and you would have had an incredible risk-reward trade on your hands there for you. Yes, yeah, you would have held it for a little bit. So what's that? October 2015 comes down. So you don't even have to hold it all the way down to here, through to June of 2016, but you've got a massive, massive move there. So it goes from one spot 2 all the way down to, you wouldn't get the lows, but you've got a 2,000 pip move on your hands there, which even if you traded for, I don't know, £10 a point, so you took like a very, very small position. So your risk on that would have been, where are we, 400, yeah, so you would have made a significant £4,000 stop loss you would have made yourself 20 grand on that one trade just by holding it. And you could even go smaller than that. You could say I put £100 stop loss, £1 per pip. So you got £100 stop loss for potential £2,000 worth of profit, which isn't at all bad at all. Anyway, I digress. Coming back to this setup over here, I really like this. I think if the market breaks out above this pattern here is a wonderful pattern to trade and one that I don't want to miss. So we will keep an eye on that. The Euro Aussie, obviously last week we had the ECB press conference, and it's not that they necessarily said a great deal. Okay, so the Draghi wasn't over in his statement, but there were a few things that kind of indicated that they were a little bit more upbeat about the economy and things like that. So the euro did get a little, the euro did get a little bit of a boost, which is what we're seeing here. The market is moving up. We were identifying this area over here. So it looks like the market is now reacting to this previous support becomes resistance there. So it might be that the market decides to take its turn to the downside from here, but we really want to wait a little bit, just give the euro a little bit more time to pull back to this sort of area here. If we can get the market come back to this area at the 1.4402, we will be selling from that area there, because it's quite a nice sort of level. What you have here, if I come out with if you zoom out of the daily chart, you can see, okay, trying to analyze this, we can see that you've got a very, very big support level. So 1, 2, 3, 4, okay, which then once the market broke through it, treated it as resistance. If we then, I bet even if we put in a Fibonacci retracement, you would see that that also coincides with a level. Yep, so we've got the 38 Fibonacci level over there as well. So we're looking to sell the market when it gets up to this area here. But we have to wait for the market to get up there. At the moment, it looks like it might react to this area, which would be a shame because we don't want to get in now. We think we've got a bit more of a pullback, but we'll just have to wait to see how that sets up. Euro Cad, little bit of an ugly chart, if I'm honest. So there's not a great deal there that I want to be trading. Euro Pound, we've been waiting for this to break to the downside for quite a while now. It's relatively resilient. And based on last week's comments, it may actually turn out to break above this level here. At the moment, we kind of see this, we've got a head and shoulders there. We really, really do want to be selling this beneath this level, but we cannot get married to a trade. So if that doesn't set up for us, we need to think about where we're going to look to get long. Now, I wouldn't buy on a break immediately above this level here, but what I would say is if the market can get out above this level and kind of hover around, consolidate around that level, and then break to the upside, then I will be interested in taking a buy trade in the Euro Pound. Whilst it's in this area here between 0.8835 and 0.8315, I'm not going to take any trade at all. So I'll be sat on the sidelines as far as that goes. Euro Yen, like the rest of the yen pairs, is kind of threatening to break out and go on to higher highs, which I can certainly see with this pair here. We need to wait for the market to break out above here at 1.2421. So with a lot of the yen pairs, we could have a very, very good opportunity on our hands. We just need to wait to see what happens, wait for the right setup. So we need it to get out above here. Okay. Euro New Zealand. This one is reacting to a previous, whoops, where's the low there? I can't find why I put that level in. Oh, here we go, got this minor one. There is no opportunity at the moment here. This was a little while back, so we can move on from this. The Euro Dollar is breaking out above this area, so you would have to be bullish above this level, but only up to this area here. When the market gets up to this area, the 1.0828, that's when we're going to be looking to sell. But in the euro dollar at the moment, there isn't anything really that I'm interested in. Pound Aussie, oops, jump straight back in there. With the pound Aussie, there is not a great deal. It's holding beneath this level, so you would have to be bearish while it holds beneath that level there. Looking for an actual trade, you might have to come down to a shorter term time frame and say perhaps getting a break of this area here, or even go shorter still to like a 1 hour time frame that we have here, and take some sort of a trend line break when the market breaks beneath that level there. We do think that the pound is going to take some heat, particularly this month and next. So we do believe that the pound's going to get weaker, but it's just a question of when is it going to get weaker. So we're going to wait for it to break beneath this level here, and then we can look to take the trade. The pound CAD, how are we feeling about that? It's consolidation. It's a bit ugly, if I'm completely honest. I'd like to see a move in either direction before I take a trade on this pair here, because there's not a great deal here that is jumping out at me saying, oh yes, take the trade. It's kind of, when you get to this sort of price action here, you're almost sort of buying a lottery ticket. There's no great opportunity in either direction, if that makes any sense. Pound Frank, definitely bearish in terms of an opportunity to trade. You might be able to get a nice pullback on the 1 hour time frame, but at the moment on the daily, even that actually is ugly. I would say stay away from I will stay away from the Pound Frank. Pound Yen, we think this is like the other yen pairs, will eventually go higher, but at the moment it's kind of caught within a range here, and this is no man's land, so there's nothing to trade there. And I know a lot of you that are watching this, you're going to get a little bit frustrated. I can imagine that there's a number of you sat there going, oh, I need to take a trade. You know, we've gone through the best part of the last 10 pairs that we've looked at. There's nothing that we're interested in. We've kind of just looked at them very quickly and moved on and say, actually, let's look for the next opportunity or the next opportunity. And there'll be some of you there thinking, I need to be in the markets. I need to take a trade. You know, but that's really not the case. You don't have to do anything. You just have to wait and bide your time and wait for the right opportunities in the market. And then when you get the right opportunities, you're going to make money. If you're one of these people that wants to take everything that moves, and I've met a few of those people, then you're going to end up losing really quite a significant amount. So, okay. So that one there is, what are we going to do with this? So the market is approaching this high over here. We get a reaction to there, then we may look to take a trade, but again, it's not looking great. Pound dollar. Again, all of the pound pairs are kind of in no man's land at the moment. They're in places where you wouldn't want to take a trade. The DAX is moving up towards the highs. I'd quite like to see a little bit of a pullback here. I'm not sure if we will, but it's very, very untidy, this instrument to trade. New Zealand CAD. So again, it's kind of in the middle of this range here. You would imagine that what we're getting is sort of like a reaction to this area here. If I was a betting man, I would look for a break beneath this area here for the market to trade down to the big support level over there. Because what seems to happen with the markets is when the price is approaching a big level, it sort of acts as a magnet. It draws the price to that level. Okay, once it's at it, then it's like when it repels it. So if you do think of these levels as being magnets. You know, if you've got sort of like two opposite poles, they attract each other, but then if you've got two of the same poles together, it pushes it apart. That's sort of what you've got going on right here. So whilst the market is coming towards a level, we would imagine that we will get a break beneath here, and the market will at some point, okay, hit 0.9208. So within the next week or two, it will hit that level there. When it gets to that level, we would then expect it to completely reject it, and then for the market to start trading to the upside. So in terms of looking for an opportunity, we've got a nice little consolidation phase right over here. So we would favor a move to the downside. And when we get that move, we would then have our stop above the highs there, selling there. We've got a nice risk reward trade there for us to come down all the way down to 92.05. I think that's a good looking trade there, actually. New Zealand Franc, similar sort of opportunity. Difference here is that there isn't really any level to trade from as such, but similar opportunity. I would imagine the market will come down to this area here. The other difference with the New Zealand Franc is it's actually playing with, it's not a major level, but it is finding support on this area here. So you've got that level to contend with if you want to take the trade. The Kiwi Yen is not doing very much at all. There's no opportunity to take the trade, but if it comes down to the 78.05 level, I would put on a buy trade without even really waiting for any confirmation. This will be the type of trade where it's such a big level, it's moved such a long way that you would expect the market to react. So if it gets down to that level there, I'm buying it because that is very, very cheap. New Zealand dollar is reacting to this level over here. What we're looking for on the 1 hour chart is like a 1, 2, 3 reversal. So I'd quite like to see the markets. You can see that it's made its move up there like that. I'd like to see the market now move down towards this area here. Okay, not get beneath that level and then break out up above it. And when it does that, I will take my trade when the market breaks out above that high over there. I'll be taking that to the upside because you've got a couple of things that are quite encouraging here. You've got a previous level of resistance and a big, big resistance there. So look, 1, 2, 3, and it's treating it as resistance again. So we've got a very, very big level there. We've got nice harmonic price action. So it's kind of, it's not ugly price action that it's really, really difficult to be able to pick a trade from. I hate trading charts that are just, they're all over the place. And it's really, really difficult to decipher which way to take the trade. But this one here is not that at all. So we'd wait for the market to come back here or even give us some sort of a consolidation. You know, even if it did that, so even if it wasn't a clear 1, 2, 3 and it did something more like this at this level here and then broke out above it, that would be an opportunity that I'd like to get involved in. So let's clear that up for you very quickly. Put on the level, we've got this big, 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 big level that the market is now reacting with, and we'll just wait to see how this plays out, but definitely bullish from that area there. Dollar CAD, we could have a nice opportunity if the market gets up to this area over here. Again, with the Canadian dollar and stuff like that, you want to keep an eye on oil prices. But if it does get up to this area over here, it's certainly going to be a trade that you're going to be interested in. Whether that be a break to the long side or a break to the downside, it's going to be one that's interesting. I wouldn't take it from this area here because it's not at the level. You want to see the market come to the level and respect the level before you take the trade. But this is certainly one that I would imagine is going to set up in within the next week or so. So keep an eye on this for this week for sure, because I can certainly see a move up to that level around the 1.3612 level. And then when we get there, we could then sell off from it. So let's keep an eye. The dollar franc is very ugly. really nothing. I mean, we can put in levels here, but the market's not going to reach this level anytime soon. But that's going to be our area of interest. If it gets up to there, or if it can get down to this area here, that's where we'll look to take it from. But at the moment, the market's nowhere near either level. So it's really kind of a little bit pointless talking about it. Finally, the dollar yen. We are already long this pair. However, we've identified this area here as another area we'd like to add to our trade. So we got long last week on a break above 11500. We are now sat a little bit out of the money, but that's not a problem because we expect this to really, really make some moves in the next few months. But if the market can then break out above this level as well, the 115.83, we're going to add to our position there. Okay, so that's they're all of the pairs. We managed to actually get through all of the pairs this week. It's probably because there's not a hell of a lot setting up in the markets, whereas on the previous weeks we had significantly more in terms of opportunities to be able to take. So there's not a great deal this week. We have a lot of data coming out this week. You know, we've got the FOMC meeting coming out later. We've got the preliminary University of Michigan survey coming out later on in the week. So we've got plenty in terms of catalysts to be able to really drive the markets this week. But then having said that, sometimes that can also be a negative thing. I can't make the mouse pointer bigger, Martin, unfortunately. Really sorry about that. I don't. It's to do with the charting platform. I forgot what I was about to say. Well, I guess I'll say I'll say thank you everybody for joining us today. Anyway, hi Raymond, how are you? It really has been a pleasure. We don't have many opportunities in the market to look at this week, but you've got to remember as traders, what we're looking to do is we're looking to make money, right? We're not looking to what's the word? We're not looking to entertain ourselves, and that's where a lot of new traders really get it wrong. They're looking, well, that's wrong to they're looking to, but they come to the markets because they think it's going to be exciting. They think they're going to make a lot of money in a very, very short space of time. And whilst that's possible, their belief is that they need to be in the markets all of the time to be able to make that money, and that's not the case. You got to wait for the right opportunities, and if you wait for the right opportunities, you're going to make money. But if you don't wait for the right opportunities and you try and trade, you know, anything that moves, you're going to lose a lot of money in the build up to the point where you actually get the right opportunity. Okay, and by the time you get the right opportunity, because you've lost so much money previously, you put yourself in a position where actually, you know, when you're clawing back losses as opposed to moving your account onto the next level, which is what we want to be doing as traders. Yes, we're going to have peaks and troughs, or peaks and valleys in our equity and our trading accounts, because that's the way trading works. But over the long run, we should make money. Okay, as long as you wait for the right opportunities, and that's what we want to do as traders. Very quick questions we've got from YouTube. Prince MM, Aussie Yen. Aussie Yen, if it breaks from the trend line, I place a buy. Where's your exit? Okay, whilst I cannot give you trading advice, all right, but if we break the trend line, our exits, let's zoom out here. So we're going to have eyes on 86, 87 for sure, but I'd be looking for the market, if we can break it out above, I'd be looking for the market to come up towards the 90s. To be honest with you, that's where I would be looking to take my profit. And then your stop loss, you'd place it somewhere beneath 85, 76. So you've got a very, very good risk reward trade on your hands for you. Okay. Any other questions as we approach the end of this webinar? Whilst I'm waiting for the questions to come in, I'd like to, thank everybody here for joining. As always, it really is a pleasure. We're into our 4th week doing this. I'm hoping you're all getting a lot of good content here. You're getting a lot of benefit, and it really is kind of setting you up for the week ahead, because that's the idea. That's really what we want to achieve from these webinars here. So I hope that is the case. I'd like to thank FX Street, as always, for putting this stuff on. It really, if it isn't for you guys, you know, we wouldn't be able to come out and deliver this content to all of you, and you guys wouldn't be able to see the analysis either. So FX Street, thank you so much. Otherwise, if there are no other questions, we can wrap it up here. I'd like to say thank you, everybody, for joining this morning, and I look forward to seeing you on next week's Talk Forex. Okay? So take care now, and have a lovely day in the markets.